The triple Qs are gapping down 0.7% overnight as Asian markets are selling off on AI bubble fears. Here's exactly how to play the 9:30 open. Good morning, traders. It's Friday, November 7th, about an hour before the bell. Before you place a single trade, you're getting one, the critical gap fill levels on the triple Qs that will define today's trend. Two, a two-stage game plan for the only catalyst that matters today at 10 a.m. And three, my highest conviction put setup for the opening session. Let's do it. Here's what you missed while you were sleeping. This was not a quiet night. The Nasdaq 100 future is down about 50 points, but that doesn't even tell the story. The real pain started in Asian session. AI bubble fears that started yesterday sell off in the US. This isn't a new narrative, it's confirmation. This is a strong risk off signal and it's creating a gap down at the open. At the same time, look at the macro signals. The 10-year treasury yield is falling. That's a flight safety of bonds. Gold is up over 0.5%. That's a flight to a safe haven asset. The market is telling us in no uncertain terms that it's scared this morning. Now let's talk about this gap, and this is the most important thing you'll ever hear this morning. Pull up the pie chart with me. Yesterday we closed at 670. Pre-market bids are at 666. It's down $4. I honestly don't trust this minor gap. I think it should be deeper. It's being held up by defensive mega caps. This is money hiding, not money buying, honestly. Now pull up the triple Q chart. This is my true market for today. Yesterday we closed at 611. Implied open right now is around 607.5. That is a 0.6% gap down, another $4 in the hole at the open. The gap fill probability is low because the catalyst is strong and it was confirmed overnight. There are only two scenarios that matter. Scenario one, the gap fill attempt. If triple Q somehow reclaims 625, that's a massive bullish reversal and a short squeeze. Scenario 2, the gap holds. The open at 610 acts as resistance and we continue the trend down. My bias is strongly bearish because of the overnight data, the earnings, and the macro signals are all aligned. The triple Qs are the real story. Those are the only levels I'm watching. Forget SPY for the first hour. Here are the zones that matter. On this triple Q chart, I've marked three lines. First, resistance at 610. This is the gap fill level. This is the stop loss for all bears. If we break above this, the bearish thesis is broken for the day. Second, critical zone 607. This is the opening price. How the market reacts to this number in the first 15 minutes tells me everything. If this fails to hold, the floor is out. And finally, the target is 603. This is the next major technical support level. If 607 breaks, this is where the market is likely headed. Now look at the VIX. Futures are at 20. Volatility is expanding, which means option premiums are expensive this morning. If you're buying puts, you are paying a high price. You need the market to move fast to make it profitable. But here's why the first 30 minutes are so dangerous. It's because the real move may not even happen until 10 a.m. Eastern. Looking at the economic calendar, 10 a.m. brings the University of Michigan Consumer Sentiment Report. This is the only major data point of the day, and after yesterday's weak layoff numbers, the market is hypersensitive to economic data. This report is a pivot point. It will either confirm the bearish fears or will give bulls the one reason they need to buy this massive dip. This creates a two-stage timeline for today. Stage 1, 9:30 a.m. till 10 a.m. That's my waiting period. This is high risk, low conviction chop. Low conviction chop. Stage 2, the action window. This is when the real trend for the day will be decided. My positioning before 10 a.m. determines if I survive the volatility at 10 a.m. Here's my exact game plan. For 9:30 to 10 a.m., this 30-minute window on the 5-minute chart is a no trade zone for me. I'm not chasing the open, the bull trap. If the triple Q tries to bounce at 9:30, I'm not buying calls. This is classic head fake bounce to suck in buyers before the 10 a.m. data. The bear trap, if the triple Q's flush hard at 9:30, I'm not chasing puts. This is a flush and reverse setup designed to stop out bears right before the real move. The real plan is I'm going to be sitting on my hands with my finger off the button until 10 a.m. I want to see that data print. I want to see the 1-minute spike. And I want to trade the 5-minute trend that establishes after the chaos from 10:05 to 10:15. While we wait, we can see the binary nature of this market. Look at earnings. Misses are being destroyed. SQ's down 14% for missing forecast. DoorDash is down 17%. Market is punishing everyone but rewarded Datadog. Datadog is up 22% on a massive beat and raised outlook. This gives us our two highest conviction setups. Here's the trade I'm waiting for. The setup, triple Q puts timed with the 10 a.m. data, the catalyst, the University of Michigan sentiment report. This is an if-then trade. The trade framework, if 10 a.m. data is a miss or in line, confirming the bearish overnight fears, then I'm buying triple Q puts on the failure of the 10 a.m. bounce. Target 605, then 603. Invalidation is a full reclaim of the gap. If the 10 a.m. data is a huge beat, then the entire bearish thesis is invalid. All short bets are off. I'm exiting any puts and immediately flipping my focus. The play would then become counter trend Datadog calls, looking to buy its first dip as it becomes the only island of strength in the market. Why I like this is a huge conviction setup for me. It's confirmed by the overnight session, by macro bond golds, by earnings. I'm just gonna simply wait for 10 a.m. catalyst to pull the trigger. Bottom line for today is open. Market buy is strongly bearish. The number one level on the triple Qs is 610. This is the opening price. It's the line in the sand, the number one risk, the 10 a.m. data print. I'm not going to get caught on the wrong side of it. My plan is to wait until 10 a.m., then attack the trend. Market opens in about 30 minutes now. Stick to your plan. Do not chase this gap. Wait for the setup. Hit the like button. If it's the best way to support the channel. Drop your opening trade in the comments. Are you playing the gap or waiting for 10 a.m.? And if you're not subscribed, hit that button. Trade smart, trade safe. I'll see you in the next one.